everyone, welcome back to this week's market update. This is Kelly coming to you on April 28th, Friday, last trading day of the month, and we're super excited to bring you another week full of updates. It was a very busy week full of economic data as well as corporate earnings, but just to pan back a little bit here, looking at the month of April, as this is our last trading week of April, equities and yields ended about flat over the month of April as the S&P gained about 0.26%, the Dow Jones gained just about 0.67%, the Nasdaq was down about 0.39%, and the 10-year U.S. Treasury yield was flat despite falling initially during the month and then rallying towards the middle end of the month. Like I was just saying, we have a lot to cover this week as the FOMC meeting will meet next week and they have a lot of economic data to review. So starting off with consumer confidence this week, we got the consumer confidence survey for the month of April, and this actually fell about 2.6% from March. So not a huge slip in it, but pretty significant given that we're still, really below the pre-pandemic levels of about 120. So at the same time, we saw consumers in this survey expect inflation to be at about 6.2%, which is actually above the current CPI of about 5%. So, consumers are extremely aware of inflation. They're feeling it still, even if the data is not exactly where they're feeling it. So very interesting of that aspect. Another thing they revealed is that consumers' purchasing plans for big ticket items such as homes, vehicles, appliances, and vacations actually declined. So again, this is really indicating that consumers are more aware of economic data, more aware of the difficult macro environment, and also the higher interest rates that we have now compared to a year ago. In the same context of consumers becoming more aware of higher interest rates and a difficult economic environment that we are stepping into, the Case-Shiller Home Price Index as well as new and pending home sales data came out this week. So among this slew of all the economic data, we got a good bit of housing data showing some interesting things. So you can see here in the Case-Shiller Home Price Index, we had just an ever so slight tick up in March, actually about a 0.2% gain from February's index, the first gain in 7 months. So really since about mid-2022, since interest rates have been priced in the markets, the home prices have declined quite a bit since then. And this is the first month that they have gained. So it's really interesting to see this as consumers are, still buying homes given the higher interest rates, just maybe not so much and maybe a little bit slower. In addition to the Case-Shiller Home Price Index, we also got new and pending home sales for the month of March. So we got about 683,000 homes sold in March, which is a decline of about 3.4% from March of 2023. So you can see that on the chart there. We are down from a year ago for sure, given the higher mortgage rates, being between 6 and 7% on a 30-year fixed mortgage. On top of this, we saw pending home sales fall about 5.2% in March, just from a month ago from February's data, which is really not typical of the usual spring home buying fever that comes along with the seasonality of home sales. So really interesting data here, not exactly matching what the Case-Shiller Home Price Index is telling us, but again, this is just 1 month of data. So really, overall, we're seeing that markets are struggling to find equilibrium between relatively low housing inventory, the higher mortgage rates, and higher monthly payments, as well as consumer demand kind of scaling back a little bit. Shifting gears here a little bit into the production, manufacturing side of the economy, led by a 9.1% monthly increase in transportation orders, durable goods was up about 3.2% in the month of March, up from February's 1.2% revised numbers. Non-defense aircraft orders was the main leader within the transportation category, up 78% just from a month ago, as industry experts are really expecting a busier travel season as consumers' discretionary spending shifts away from goods and more into experiences and services. Looking even further out than those data points, we also got the Q1 GDP estimate for the quarter came out at a slimmer than expected 1.1% gain from Q4, and this rise was led by consumer spending, exports, government spending, and non-residential fixed investments. was also brought lower by declines in private inventory and residential fixed investments. So you can see over the last year or so, we've had pretty muted GDP gains as the economy kind of figures itself out and might be in for a potential recession soon. Also, this week we got the PCE inflation report for the month of March. Like I said, this was a very, very full week of economic data. So PCE inflation came in at an annual rate of 4.2%, so definitely cooled off from February's over 5% data point there. Core PCE cooled to about 4.6% from last month's 4.7%. PCE, core PCE data, so not as cool there, but again, we're moving in the right direction, not exactly where we need to be at that 2% Fed goal, but we are moving in the right direction. So this comes as the Fed's next FOMC meeting is coming up pretty soon in May 3rd, just a few days away here. So really important data to look at as we predict what the Fed will do next week. With the PCE report, we got personal income, spending, and saving as well. Like I was saying earlier, personal income rose about 0.3% compared to estimates of 0.2% month over month, while personal spending was actually neutral, so 0% change in personal spending as consumers are becoming more and more aware of the difficult macro environment. What I found really interesting was the personal savings rate broke the 5% mark up to 5.1% in March, and this was up from February's 4.8% personal savings rate. So all of this, again, in the month of March, the month full of banking turmoil as banks failed and combined and got bought out multiple times throughout the month, as, at the same time, consumers are, again, becoming more and more aware of the difficult macro environment and maybe pulling back on spending a little bit more than they might have beforehand. Final economic update of the week, we got the employment cost index for the first quarter of 2023. Came in hotter than expected at a 1.2% gain in the cost of employment from the previous quarter. So this comes as the Fed is going to make another rate hike decision on May 3rd, coming up in just a few days here. And really, we're seeing as of Thursday, April 27th, the probabilities of a 25 basis point rate hike next week is about 86%. So really likely here, especially when we're getting hot employment data like this. So as always, we're constantly watching the news on inflation, the Fed, interest rates. We saw corporate earnings even more so this week. We didn't get too much into that this week, but everything we're constantly looking at to best monitor and take care of our portfolios per their mandate. So we really appreciate you tuning in this week, and we look forward to providing another update soon.